If you're taking 5, 10 trades a day, constantly second guessing your decisions, staring at the charts, trying to find opportunities, you're making trading way harder than it needs to be. The reality is you do not need more trades. You need quality trades, and you need a way to be able to identify where the opportunities actually exist. You need a way of actually seeing who's in control, a way to stop trying to predict what's going to happen and react to what the market is telling you. So in this video, I'm going to break down a gold trade I took last week. I'm going to show you the exact process I use every single day to find these high probability opportunities in the market so you can steal it and start winning more trades today. Now, the key to a good trading system is removing decision making when you're emotional, when you're in the markets. That is why you need a structured process. And this is the exact process I use every single day that allows me to find these high probability trades. All right, the first thing I want to know is when I'm scanning the charts, what markets and assets am I actually interested in? Okay, step 1, market selection. We need a way to determine our bias. Step 2, trade locations. Where do I want to get involved? Okay, what do I want to see to start looking for a trade entry? And step 3 is when to enter. Okay, what exactly in that checklist do I need to see to enter the trade? You do not want to be guessing going, oh, I think this is a good trade, maybe not. That's not how we trade, okay? You want an exact checklist so you can follow it and you know if you enter the trade and you know if you don't. So let's start with bias, okay? So we're looking at the gold market. This is the chart I was looking at on the day I took the trade. I want to analyze, am I interested in this market? Do I want to be looking for trades? Is it high probability conditions? So we do our top-down analysis, okay? We use our trend bands to remove all the subjectivity and we look at objective conditions in the market. For me, we're below the trend bands, so right now I'm not interested in longs, okay? I can also see the market is looking very heavy. It's not looking like it's putting in a strong bottom. So here on the daily, that's all I need to do, okay? Because I'm looking for trades today. I don't really care what the daily does over the next few days. Then I jump down to the 4-hour. And the 4-hour is painting the exact same picture, okay? We've been respecting the trend bands, we're bearish, we're bouncing off the trend bands and we're rejecting in here. I can see this previous 4-hour candles rejecting. So for me, at this point, I'm still bearish based on the daily and the 4-hour. So then we drop down again, okay? And this is where it starts to get really important because we're executing trades intraday. So for me, the hourly and the M15 is really where I do most of my work. To have a valid bias, I have to be seeing price respecting the trend band to the downside, okay? And it's exactly what we can see here. In this push down, price is respecting the trend band, we're selling off and we're rejecting from that trend band. So once I have this clear bias on the H1, I can jump to my entry time frame, which is the M15, look for the same bias. And that's exactly what we're seeing, all right? We can see in this section of price action, we're respecting the trend bands, we're selling off, we're rejecting from supply zones, we're sweeping liquidity and we're pushing lower. We briefly got above, price failed to hold, okay? We can see here we're reacting to what price is doing. We got on top, so potentially this was the start of a reversal and we could look for moves higher, but we bounced, failed, got back under, and we're putting in a bearish retest. So that is my bias. It ticks all the boxes, okay? That gives me the green light to look for shorts on this asset. Next thing I'm looking for is trade framework, okay? I need to be seeing one of my valid trade frameworks to enter this trade. And in this example, that's exactly what we got, okay? We got this very, very clean sweep of liquidity, all right? Now, to me, this is a bearish retest. It's a reaction. It's a rejection, okay? We've swept liquidity, impulsive stabs up, moves that are more aggressive in the market are more likely to get filled. So now that I've seen my framework, okay, I've had the sweep of liquidity. Now I need to move on to my next step. And the next step is the entry trigger, all right? So I'm using my order flow data and following my checklist-based entry system to see if I have that trigger. And exactly what I want to be seeing for my entry trigger in here is trapped traders. What do I mean by that? I'm looking for traders that are trying to trade against this momentum and getting trapped offside, meaning I want to see lots of market buying up here, getting absorbed by big players and institutional limit sells that are riding the momentum and driving the market lower. So essentially in here, I want to be seeing aggressive buyers trapped offside. Once price moves against them, everybody who's bought up here is trapped and they're going to have to close their buyer position. And to close a buyer position, that's a sell, that's fuel for the move lower. So this is our footprint chart, and this is the exact same candle we were looking at on our trading view price chart. So what I want to be seeing up here is loads of positive delta getting absorbed by limit buyers. And that's exactly what we can see in this candle. Basically, everything in this candle was positive by delta, yet price continued to close all the way back down there. That's a very strong signal. Those aggressive buyers are trapped and they're getting absorbed by limit sellers. So we've gone through our process, okay? There's no subjectivity. We identified our bias using our top-down analysis with our trend bands. We identified one of our valid trade frameworks. Then we saw exactly what we need to see with our entry trigger. There's no emotion. There's no overthinking what we need to do here. What we have to do is execute. Our job as traders is to execute when we see what we need to see. So we enter the trade, okay? In this example, our stop goes behind the valid framework, which is the swing point and the liquidity sweep, and then we're targeting the lows, okay? So if we play it forward, we see exactly what happened. Price pushed down. In less than 40 minutes, we had our trade play out, okay? We're not getting chopped up in the market. We're not trying to second guess what's happening, and we're definitely not trying to predict the future. Being a profitable trader is all about having a system that you can execute over and over again, not letting your emotions get in the way, all right? The flow edge system is the process I built. It allows me to stay on the right side of the market more often than not. And most importantly, it removes the stress and the second guessing from the trading. So if you want to follow this system and learn exactly how I trade, check out the links in the description of this video. You can jump in my Discord for free, or you can get free access to the flow edge system. I'll see you in the next video.